Ladies and gentlemen, I'm Mike, the property tax guy. Now, many homeowners think their mortgage payment is locked in until their lender sends them a new bill. See, escrow shortages caused by a property tax increase can raise payments overnight. Some scramble to adjust, others fall behind without warning. These are their stories.
So my husband and I refinanced our mortgage today because interest rates dropped and it was enough to save us $300 a month. However, I have in my hands the amortization schedule, which is how long it's going to take us to pay off said mortgage and how much would go towards principal and interest each month. And I want to use this to talk to you about why home buying in America is an absolute fucking scam and why this will be the last house we ever buy in this country. So just really quick facts, it's a standard 30-year mortgage. It's a VA loan, so I didn't have to put anything down in order to refinance, and I don't have to pay any mortgage insurance, which is what normal people have to pay when they don't put 20% down. But because we didn't put anything down, I went from owing $784,000 on my home back up to $795,000. But my original interest rate on this house was 6.2%, and now it is 5.6%.
Let's stop right there. Buying a house at a 6.2 interest rate to a 5.6 interest rate. I mean, buying at a 6.2% interest rate is out of this world. Now, like I always say, everybody timing is different. If it was the right time for you to buy a home at that 6.2% interest rate, which wasn't for a lot of people, then so be it. But if you wanted to refinance to go down to a 5.2%, mortgage payments are going to be lowered, but you pretty much you're renewing your loan. So you're going to have another 30 years and they're going to recoup that back on the back end regardless. Your mortgage payment's just going to be lower. Now, another thing too is, well, that's an astronomical house price. You know what I'm saying? So a lot of people do not have, like she said, the 20% to put down on a home. That's just realistic. That's just where we at right now. A lot of people do 3.5%. They do the FHA loans, things of that nature. So when they have the mortgage insurance premium and they have all these things included in their mortgage payments, a lot of people don't know that when you refinance, you are pretty much adding more years onto your loan, which means it's going to take you longer to pay your house off if you're not making double payments a month, which most people don't. They make that single payment a month to not worry about anything and taking care of their other responsibilities or personal arrangements that they have. So let's continue with the video.
Planning on selling this house when my husband retires in 4 years and exiting the US. So of course, I was interested to see what will I owe at that time in 2030. And at that point in 2030, we will owe just under $750,000. So I will only have paid off $50,000 worth of my mortgage in the next 4 years.
Wow. That's crazy. That's crazy. And one of the reasons it's crazy is because one thing that's alarming me, that's sticking out to me, is she's saying that, this is the last time that her and her husband will buy a home in the US. She already said her husband, I don't know if it's her and her husband, but her husband is military. So obviously they're probably going to go somewhere else and buy a home. Now, I don't know how other countries work. A lot of us don't. But I know that here in America, yeah, the interest rates are out of this world. House prices are out of this world. Now things are going down, steadily going down. The interest rates are going down. I don't know the interest rate, like I said. Well, I know the interest rate where they bought the house at, but I don't know what year they bought their home at, that it was a 6.2%, which, probably wasn't too much long ago. It probably was 2022, 23, but now we're at a 4.25% interest rate as of this date, so because Jerome Powell cut the rate. So this is where we at right now, and paying back off that loan is going to be crazy when you finish. She's saying these last few years or whatever, by 2030, that when she leaves that house, they plan on leaving or whatever, going out the country, they're going to owe that amount on the house. So that means when they sell that house, they're going to have to sell it for more than probably what it's worth, or more, to recuperate some money back from the loan, or to at least ideally, most people want to, let's say if you owe $750,000 on the mortgage, you're going to want to sell the home for around about probably $1 million, if you have that. You know what I'm saying? If you particularly in that particular market. But if you have that home, you have $750,000 left on the mortgage, you're going to want to sell it for at least a 30 or 40% increase based on what's left in your mortgage, to cover any other fees if the buyer wants to renegotiate terms, or it's placed on the market and it's not selling as much. So this is how a lot of people I said before in my earlier video become accidental landlords, because they want to get from out under this deal. It's like being under a bad creditor or a bad debt, a creditor, and you want to just get from out under it. But the thing about it is, once you take this particular role and you take this journey to buy a house, you must be fully all in and fully committed, and know the terms with anything, know the terms and conditions before you sign in. Now, is the interest rates crazy? Yes, I agree. The interest rates are crazy. But that's where you're supposed to know. Look, this is where we at. We're here to know, so we can. We're here to know so we can grow. That's why we're here. You know what I'm saying? So kudos to people that have that particular financial backing to be able to afford a home like that, and 20% down, and to do all the 9 yards and things of that nature, which is what most people aren't able to do. But that just goes to show that it affects everybody across the board, no matter how much you make a year. You know what I mean?
But the math ain't mathin', because my payment is $5,700 a month. $5,700 a month times 50 payments is $285,000. And if you look at the schedule, it tells you, oh yeah, you're financing $795,000, but if you kept this interest rate over 30 years, you're actually going to end up paying $1.6 million. But the biggest scam of all is how much interest they charge you the first year you own the house. And I have other videos on this. I've talked about it. Again, I put myself in this situation. It is what it is. The point is, I'm calling out the banks because they are fucking ridiculous.
And this is where I have my problem right here. The banks aren't the problem. Now, a lot of people may say, look, yo, Mike, property tax, like, what are you talking about? The banks are the problem. The banks only are. We control the banks. As much as people think that we don't control anything and that we don't have no say with, sir, if the people stand up, I'm telling you, it will be a difference. For example, property taxes are a reflection of the real estate market. So if people are coming in your neighborhood, whether it be a regular family or an investor that's buying houses for 200 or 300,000, whatever, shell homes that are boarded up, whatever, or even average homes, and people are buying those homes. And what's going to happen from there is your property taxes are going to increase because the value of that home, your value of your home increased because somebody's bought the value of the other home that looked like yours in that same neighborhood increase. But if people stop overpaying for houses and stop getting in the market and trying to get the most and the biggest and the baddest thing, but if you do want to get the biggest and the baddest thing, wait for it. Come down. Let the price come down. Buyers, you have the power. You do not have to move just because you want this fear of missing out, or you want this big dream home. You can wait. Please wait. Because if you wait, everybody's happy. If you wait, you're happy because your property taxes won't be as high. Everybody, see, when the buyers wait and don't move, and then the sellers will come down, it's going to be an equilibrium. We got to meet in the middle somewhere. But the sellers right now are too high up here, but now we're gradually coming down to a equilibrium. And that's what we got to meet at.
My mortgage payment went from $1,600 to $3,500. This is all I have been seeing going on my timeline on TikTok right now, on how everybody's mortgage rates are increasing. Honestly, I can tell you what, when I first bought my house and I had a realtor, my realtor did not tell me anything. I bought the house. I didn't know what I was doing. I was not a realtor then, of course. And I did not learn about my payment until the closing day. I did not know how much my mortgage payment was going to be until the closing day. And I signed on the dotted line. At that point, for me, I was ready to buy a house. So I just felt like it was what it was. Unfortunately, my mortgage payment is $1,600, and it's still $1,600. But I guess my question is, for everyone's mortgage that's going up, like, I know it's a terrible situation, but also when you are purchasing your homes, are you not understanding what questions to ask your lender? Because you can always ask your lender when you go under contract on a home to show you what your monthly payment is going to be. Of course, it's going to be an estimate, but also at the closing table, when the attorney is going over how much you're going to pay for your mortgage, and they give you a piece of paper that has all your mortgages for however many ever years that you have to pay your mortgage for. At that time, when you're signing your papers, don't just sign the papers, just ask questions that you may have about your mortgage.
And I want to start right there. That's and one of the things I want to start right there. Reason is why, because you don't necessarily have to wait till you get to the closing table to ask how much you're going to be paying for your mortgage. You know, a lot of lenders too as well. Before you even go under contract for that house, they can tell you, okay, lender, I'm looking to buy a house that's worth around 250,000 or 300,000, or you can ask them to drop a rough draft of how much you'll be paying based on the price of the home that you're going to buy, that you're going to be using the loan for. And then from there, they can also give you a tax assessment based on a tax assessment estimate of value. And if you want something more concrete, depending on where you want to live at and the house that you're looking at, you can also call the assessor's office and say, hey, I'm looking at 123 Main Street. I kind of want to buy it, but I know I want to know the property taxes on it. Usually, the assessor's office would say, "Look, we can't give you that value, and not because it's not public information. It's because we don't want to be any type. We don't want to get involved in anything legally. But what we can do is give you an estimate of value. So what they'll do is they'll take whatever value they give, whatever value 123 Main Street is, and that depends on if the house is renovated or not, or new construction. You just got to be honest with them and tell them what it is, because you don't got the house yet, so it's not going to affect you, right? So you'll tell them, like, look, this house is renovated, and they be like, oh, it's renovated. We didn't know about that. So it's worth around about 280 now. So what they're going to do is they're going to take that 280, they're going to multiply it by the tax rate, and they're going to tell you that's how much you're paying in taxes for the year. You divide that up into 12, that's how much you're going to pay each month in taxes, and that's not including your insurance. Now, insurance is kind of a little bit more tricky. You can always shop around for insurance, but insurance fluctuates all the time, just like property taxes. But the scale for insurance is a little different because every company pretty much do it a little bit different ways. So you can find out what it is. You can call your lender, call the assessor's office, and be aware of these things, know these things. And like she said, the realtor should have explained it. A lot of realtors, I always say, a lot of realtors, a lot of people that are dependent upon the sale to receive some type of income, they just go, 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 go. I don't think it's all of them, but a lot of them do that. So you want to be able to, process these things efficiently in a good manner, think on these things before you make a hasty decision out of fear of missing out, or just trying to get the home of your dreams and not worrying about anything else because you just want to be happy. Be happy, but be comfortable. Don't be house poor and don't be mortgage poor, because if you do that, you might as well rent.
Let's have a very quick lesson on property taxes. I know everyone loves to house hunt on Zillow, Trulia, Realtor.com, whatever, and every listing is going to have property tax history. I'm going to be very, 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 very clear. Listen, the property taxes that you are seeing, those aren't going to be the taxes that you are paying if you buy that house. No, ma'am. What happens is after a property is sold, you're required to file forms with the county or city that you bought in, and this will trigger a reassessment of your property taxes. And guess what's not going to happen? Taxes aren't going to go down. They're going to go up. And a lot of people don't plan for this. A lot of people aren't aware of this. So what happens is you buy your house, you have your mortgage payment, and then 6 months, maybe a year later, depending on when you buy, you get a letter saying your taxes went up. Guess what's coming very quickly after that? A letter from your mortgage company saying your monthly payment's going up. There are tools where you can estimate your future tax payment. I'll link it in my bio.
All right. So pretty much, there are tools, but tools. I'm not sure what tools she's going to share, but I'll put everybody's description down below. So I'm using them down below so you can look at it and link in the description. But pretty much when it comes down to property taxes, you can also call just your assessor's office to figure that out. Property taxes usually do go up. They can go down based on the things that's going on with the property itself. So if you buy the property and this property has some types of damage of the condition of where they had it at. And let's say they had your home as fully renovated, but you bought a home that's average because you want to fix it up some, but it's not in that condition yet that they got it. So they'll come out to the property and they'll reduce the value. But it has to be done usually in the appeal period time for the assessor's office. Right. So that in the assessor's office, it has to be done within that appeal period time that they can actually bring that value down. Or if you have a square footage issue. Now, every locality is different. I advise you just to go out, talk to your locality, talk to the different people in that area, as far as your assessors or appraisers in that area, to figure out what's the best scenario for you to be able to get that reduction in your assessment value when that time comes. But they are looking for things going on with the property, and your property taxes can go down, but usually they do go up. And a lot of times too is what Zestimate, Redfin, Zillow, these types of things, they only give you an estimate of the property taxes. And they'll have things like, okay, the property taxes paid in 2023 was 2,400, in 2024 it was 2,200. But that's an estimate. They're not always accurate when it comes to that. They have to they have to pull data from the localities to get that information. And a lot of times it's not always right because Zillow and everywhere else, they fluctuate the numbers a little bit. And sometimes it's not necessarily they fluctuate the numbers, their data just off, because they're doing a rush job. Because think about it, Zillow does the entire North America as far as I'm concerned, maybe the world. So they got different people in different sections, so data sometimes get jumbled up. So you want to call your assessor's office to get that actual value of the home and the actual property taxes that you'll be paying on the home, which is very, 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 very possible. But that's all I have for you today. I'm Mike, the property tax guy. Have a blessed day.